But I want to welcome in our next guest. That's Lucas Downey, the co-founder of Map Signals, who's got some thoughts here on the consumer space. Let's start with just broadly, and then I know you got a couple stock ideas, names that you own that you want to talk about. But just broadly, we keep hearing about sentiment, at least that it had been notably different than maybe what GDP was saying or what retail sales was saying. And it was like this K-shaped economy. Are there any signs that some of that's letting up, or are things shifting?
Well, we can look at the recent consumer sentiment. It continues to trend higher. In fact, we're at the highest level over the past 7 months. The stock market also is going to be reflective of that, but people in general are feeling better about their personal finance situation. The prospects for the economy over the near term and longer term is favoring that the consumer is really starting to get excited about what is ahead. And I think that that is a welcome change that we haven't really had over the past couple of months.
All right, let's talk one of the names, and this has been a name that's come up a lot whenever I've talked to anyone who just has even a tangential, or let's even say one eye on the retail space, and that's Walmart. And the reason is pretty clear. I mean, a lot of the trends have favored them. First off, they're a very value-oriented in terms of price. We know that we've got this kind of price-conscious consumer, but there seems to be other things that are drawing business towards Walmart. I mean, this stock, if you took the name off it, you might think this was one of these AI chip stocks. That's just how good of a performer it's been. What do you like about Walmart? And given the fact that the stock's been such a strong performer, is that worrisome?
So I've owned this stock a number of years. It has been one of the best themes. A lot of institutional money has been chasing this name over the past year, and for good reason. In fact, the stock is the 21st best performer in the S&P year to date. It's up 73%. And a lot of this has to do with analysts just being behind the ball. Walmart continues to come out quarter after quarter, raise their numbers. Guidance continues to go up. And you can see that their e-com continues to really surprise to the upside. I know it's a value-oriented brand, but it's a trusted brand. And you can hear some of management's commentary about higher income consumers really starting to make the shift towards Walmart because people are searching for value, and Walmart is one of the best areas to find it.
I haven't done the math, but I'm sure the Sharpe ratio on a Walmart investment has been incredible. I mean, that's a straight line to the upside with a couple jumps around earnings that continues to deliver for shareholders. So not only, nice call for being in it for a while, but staying with it, given the fact that we're talking about a consumer staple here. Now, I know they got a lot of investments into AI, and I think that's one of the fascinating things is this is one of the companies that's actually going to perhaps be able to monetize through efficiencies the use cases of AI in an early way. They've talked about this for a few quarters now where, they've got, I don't even know how many, but let's say hundreds of thousands, if not millions of different items that they're selling. Well, AI can catalog those and organize them way more efficiently than a human can. So you can see the use cases. But to me, is this, and I want your thoughts on this, Lucas, is this more of a story of just us moving away from going to the store and buying things online and just Walmart being in the right place for that? We're looking for cheaper goods. We're looking for them quickly. And I can only think of a handful of names that can do that. Amazon and Walmart are the first two that come to mind. Is this just right place, right time for where the consumer's at?
I think it is. With inflation issues that we've been having, the grocery store, we know a big piece of the pie for Walmart is winning the grocery war, and they continue to do that. And I think people are going into the stores and they're realizing, wow, there's a lot of good stuff here that I can be grabbing while I'm shopping for groceries. Walmart, it's been around a long time. People are very ingrained with seeing Walmart. Basically you're driving around all over America, you're seeing these stores. But this is just the right place, the right time. They started to expand their e-com. I mean, it's not up to par with where Amazon is, but it is gaining ground. You talk about what they're doing with AI and how they're able to save some money. That just helps the margin story here. And that's what I think a lot of the analysts maybe have not been up to par with some of these results that they're putting out, is that, the consumer continues to spend, but they are choosing specific areas of where they want to spend. Walmart is winning in that category top to bottom.
Yeah, and while Walmart isn't Amazon, Amazon's not Walmart either. So there's always a difference in terms of brick and mortar and the presence that Walmart has there. I mean, it's a distant second, but it's a clear second in the case of Walmart and its role domestically for e-commerce. So incredible stuff. Now, let's shift gears entirely to the other name that you want to talk about. This is, I'll be frank with you, not a name that I look at nearly as often as a name like Walmart, just doesn't come up as frequently. But doesn't change the fact that this has been another incredible performer, up some 90% over the last 12 months. It seems to be breaking, what had been a bit of a slumber for, let's call it 6 months or so. Williams-Sonoma is the name that you also own. Talk to me about what sticks out about this name, because this is completely different in terms of price point and kind of the type of consumer that would be shopping here.
This is a higher end product set. And that is where a lot of the health of the economy has been. Economists have, really been sour on the economy, but really weren't focused that, the higher income is what's driving a lot of consumer spending. So Williams-Sonoma is one of these stories where the management continues to knock it out of the park, whether it be share buybacks, whether it be dividend growth. And also, you start to see this revival that's been happening overall in the mid-cap space, really since the summer. But Williams-Sonoma, you just listen to the latest earnings call, and they're talking about the strengthening that's happening in the Williams-Sonoma brand. Also, they're talking about West Elm actually came in better, Pottery Barn, kids and teen doing better. So consumers are wanting to spend here. Their latest earnings report just blew away guidance. And you saw the stock pop about basically 30% to new all-time highs. People are getting excited for the future, and these estimates that the Wall Street is expecting, they may also be too low, just like in the case of Walmart.
And I'm glad you mentioned the fact that while the namesake for kind of like the stock holding part of this is Williams-Sonoma, historically, that's, the lower side of the revenue. It's like 15% typically. Those other names you mentioned, Pottery Barn, it's closer to 40%. West Elm, quarter of the revenue. So, some of these other brands that you maybe not think of when you see Williams-Sonoma are actually driving a lot of the revenue, but to see strength kind of broadly across those names, of course, is important. This, again, as you said, though, is another outperformer. What we've sort of seen macro-wise is a bit of a broadening. It does seem, though, that if sentiment is picking up broadly for consumers, as you talked about, it's hard to see how maybe a higher income consumer would suddenly lose that confidence. So is this a situation where we're starting to see the bottom part of that K catch up, but the top part of that K-shaped recovery is still going to be strong, which could benefit a name like Williams-Sonoma and the other brands it has?
I believe that's the case. I could see consumers starting to trade up as they start to feel better about their personal situation, right? We've got interest rates coming down. You've got a lot of great tailwinds that are coming for the consumer in 2025. I could see Williams-Sonoma being a great beneficiary of a new, customer clientele starting to trade up. It just makes sense. And that's a little bit what they were saying on the management call as well, what they're seeing.
It's almost, in a way, too, these two names together. I know it doesn't perfectly work, but it's almost like the barbell strategy. It's where you got that higher-end consumer, and then you got the kind of ultra-low-end, value-oriented scale play. So it makes a lot of sense in the backdrop of the economy we're in. Any final thoughts here, Lucas, before we say goodbye and you get to set up for Thanksgiving? Enjoy the holiday.
Certainly, I think the backdrop continues to be very constructive for markets going forward. You see that small caps, they just made new all-time highs. Mid caps continue to outperform. If you just focus on the companies that are guiding higher with their EPS, continue to raise the bar, those are going to be the winners of the months and next year.
Good stuff. Lucas Downey, co-founder of Map Signals, with some thoughts on the retail space and the consumer broadly. Two stock picks, perhaps, as well, in Walmart and Williams-Sonoma. Have a great holiday.